A new report from TD Economics predicts that home sales are going to see their weakest level in over 20 years since 2001. And yet at the same time, they are also saying that home prices are going to hit the bottom by mid of this year in 2023. And RBC has also been quoted of saying that home prices are going to bottom out by around the end of Q1. Today, Canada's inflation numbers came out from November. We were at 6.8%, and December's numbers down 0.5% to 6.3%, which is offering encouraging signs that we are on the road to seeing an end to our rate hikes, but not just yet. In this video, I'm going to share some very brief numbers and stats and ideas on where it looks like economists and banks are predicting that the real estate market is going to go. But I also want to show you something about consumer confidence and something that is extremely eye-opening that you have to stick around for, because it is amazing what happens when consumer confidence dips and what happens on the other side. Hey everybody, my name is Jonathan Lerner with Vancouver Life Real Estate Group, and I bring you real estate related videos every single week to keep you updated, informed, so that you can make the right decisions when it comes to the real estate market and buying, selling, or investing. If you have any questions about the real estate market or your situation in general, go down right below this video and click the link there to be able to book a 30-minute call with me. As I said at the beginning of this video, TD Economics has predicted that we're going to see the lowest level of home sales in over 20 years since 2001. Home prices will bottom out by about mid of this year, and that interest rates are one of our contacts at one of the big banks has said that they are already in talks about lowering interest rates by the end of this year, but it won't be before we see an increase on the next Bank of Canada announcement on January 25th. And the majority of economists are predicting that we are going to see a quarter-point increase. So it is still going to get more expensive to borrow money, and home prices will see a little bit more of an effect on that in the coming months. But again, as the banks are predicting, it looks like we'll hit the bottom by the end of Q1 or about mid of this year in terms of home prices. Despite it looking like good things are on the horizon, affordability is at its worst level that it's ever been in our history so far. And a recent report by MMP, a bankruptcy trustee firm, is showing that Canadians their worries and anxiety about rising debt is also increasing dramatically as well. Now, not something that's unexpected, but here's a couple numbers for you. It says that 64% say that as interest rates rise, that they're going to be more concerned about their ability to pay their debts. And 59% say that if interest rates go up much more, they are going to be in financial trouble. Now, thankfully, it looks like at this point that we're only going to be raising up a quarter point on January 25th, and then that we should be plateauing, and that should be the end of rate hikes for a while. And as I said, our contacts at one of the big banks has said that they're looking at pricing in mortgage rate reductions, interest rate reductions by the end of this year. And so hopefully that's not going to be the case, and Canadians are going to be in a better spot. December's inflation numbers also got announced today, which is further increasing our thought process of positive news as we go into the rest of 2023, as our inflation numbers drop by 0.5% from November to December, which is fantastic news and follows suit with what we saw down south in the US as well. Now, a big aspect of that drop came from falling gas prices. Everything is trending in the right direction, and core inflation also dropped by 0.4% as well, which is one of our strongest measures of inflation that we want to pay attention to. Banks are getting more creative with helping their clients to be able to pay their bills and their mortgages right now, but it's not making the affordability any better. And I laugh at banks saying that affordability is going to get even better for housing, because we're just not in a situation where that can happen, because the basic economics of supply and demand are not here. We have the lowest inventory that we've had. We have record lows of that. We have record highs of immigration and people coming into the country, and we just don't have enough homes here. People are not selling, but physically, the number of homes that we have available is not enough for the number of people that we are bringing into the country. So this supply and demand factor, housing affordability, is going to be an issue for a long time and years to come. And it's going to be a conversation that we're going to be having consistently for I don't know when, unless something massive happens to be able to change that. Moving on from affordability, I want to jump into consumer confidence. Now, interest rates have risen at the fastest rate that they have in 30 years. And so I wanted you to take a look at this graph right here. And consumer confidence is as low as it was in the global financial crisis in 08-09. And it's also as bad right now as it was in the pandemic, when the world basically got shut down for those 2 months and consumer confidence dropped drastically in every aspect. But what I want you to look at is what happens on the other side. And look how fast, every single time consumer confidence hit the bottom, look how fast it bounced back. And should history repeat itself, there's a good chance that it likely will jump right back up. It's also very likely that in Vancouver, we're gonna see that to a greater level, and that we will probably lead the country in terms of a bounce back when it comes to real estate. Because year over year right now, the inventory in Vancouver has only increased by 25%, whereas in Toronto, it's increased by 170%. And this is a big aspect why our home prices has been stable basically since June here, almost in the GVRD. Because of our levels of inventory being so low, the demand is still strong, and we haven't reduced our prices drastically like they have in Toronto because of the massive increase of inventory that they've had. And now, as the inflation numbers are starting to decrease, consumer sentiment out there is also starting to improve. And when that improves, consumer confidence improves, and then the wealth effect and people being willing to leverage and get more credit increases, and that's when the real estate market will really start to take a turn and shift, and people will start to be in the market, both number one, putting their homes up for sale a little bit more, but also much more buyer demand coming back in. There is pent-up demand from a lot of people that have been waiting for not wanting to borrow money at the most expensive it's ever been. But now that consumer confidence or sentiment in the market in terms of things potentially starting to improve, we have more people looking at the market and wanting to start to get in. So overall, affordability is still getting worse. We're gonna have that 25-point interest rate hike on January 25th, most likely. However, it looks like they're going to plateau for a while, and some banks are already having talks about decreasing their interest rates by the end of the year. So there is good news on the horizon, and we just have to pay attention to what's happening. And this could be a good opportunity for you as a buyer to be able to get in before the masses get in. And because there's opportunity here to be able to get the lowest home price that you possibly can, go on a variable rate, maybe go on a fixed rate for 1 to 2 years, talk with your mortgage broker about your situation, and being able to take advantage of where the market is right now, refinance, get a better interest rate down the road, and you're gonna be setting yourself up for a good appreciation. Because again, once we hit the bottom of that consumer confidence, on the other side, it shot right back up. And if history repeats itself, you're gonna be a very good situation in terms of appreciation on a property. That's it for now. If you gained some value from this video, please make sure to like, to subscribe, to click that bell to get notified on new videos as they come out, so you can stay on top of the market, what is happening, and make the best informed decision for you when it comes to real estate. Have an amazing day. We'll see you on the next video.